This housing crisis in California keeps getting even worse. The home prices in neighborhoods like this keep skyrocketing, up 15% year over year, even though mortgage rates are at 7%. How is that possible? And how do these people in California afford it? This is one of the big mysteries of the California housing market. It's a state that has the highest home prices in America, and yet it's also a state where tons and tons of people are leaving. I'm talking to the locals here in Orange County, and many of them are fed up. They're saying that they've lived here 30 or 40 years and that they wanna leave and that they're seeing their friends leave. And my fear, everyone, and what should be your fear, is that this is gonna end in a calamitous collapse. Because what's going on here in California, it's not sustainable. These prices, these mortgage payments, these rents, they cannot continue to be this high. I mean, if you look in this neighborhood, everyone, the rentals to rent a house, you're talking $5,000, $6,000, $7,000 a month. And to buy a house, you're talking 1.5 million. And to be clear, everyone, those prices are not for a nice house. That's for the typical house. And when you talk about a $1.5 million price for a house that's like 2,200 square feet, we're talking a mortgage payment of close to $10,000 a month, everyone, at today's interest rates. I mean, can you guys imagine that? You know, I think if you live in California, you're used to it. If you don't live in California, you look at these houses and you're like, what is going on? How are these houses, which are like 1,500 to 2,000 square feet, so expensive? And who's buying the homes, right? And that's the key question. Who's buying these homes? Because when you look at the income levels here on Reventure app, you look at the median household income in these areas in Orange County and Tustin, we're talking 100,000, 120,000 median household income. I mean, that's above average, but that's not nearly enough to actually afford one of these houses. And so, you know, I've asked some local realtors the last couple of days, like, who's actually buying these homes? Because it doesn't seem to be the locals. And what these realtors have told me is that there's a lot of foreign capital now coming in to Southern California, especially in buying up the homes. A lot of the capital is coming from China because China's housing market is in a crash right now. China's housing market's crashing. They're having their own like 2008 crash over there right now, 2008 repeat. And so the Chinese owners are selling out of China and then buying here in California, and often buying with cash. Now, I don't have data on exactly how many of the purchases are from foreign entities. However, the thing to understand is that even if it's a small amount of purchases from these foreign entities, it's meaningful because the inventory levels here in Southern California's housing market are super, super low. We can see here in this zip code in Tustin, the inventory is down about 40% from long-term norms. So there's not a lot of homes for sale. So you don't need that many foreign buyers or maybe some wealthy buyers coming in from other parts of America. You know, we're seeing values now go down in states like Florida and Texas. We're seeing values go down in Colorado and Idaho. But here in Southern California, they keep going up. And one of the big mysteries, right, is how this is possible with the continued outbound migration from the state. Because you would think that if a state like California is losing lots of people, that home prices would have to go down. But in fact, it's the exact opposite. So over the last 5 or 6 years, migration data from the census, which is viewable on Reventure app, shows that California's lost around 1 million people. And last year they lost around 200,000 due to more people moving out than moving in. So that's bad. You know, that means that this area, it's losing population. The population growth is negative. And this is the case for almost every county in California, everyone. You can see almost all these counties are blue, which indicates negative migration, people leaving. There's only a handful of counties which are red. Riverside County is one of them. San Joaquin County is another. However, except for those handful, populations are declining, people are leaving, and they will likely continue to leave. Because I've been here the last couple days, and I've been talking to the locals, everyone. You know, when I go on these trips, I make sure to go to open houses. I make sure to go to restaurants and sit at the bar and just strike up conversations. And the one thing I just keep hearing repeated is that people don't like living here. And that sounds kind of crazy to say because, like, this is beautiful, right? This is like a beautiful place, maybe the most beautiful place in America. But I talked to, for instance, a restaurant owner here in Tustin. He's been here 40 years, and he says he hates it now. He says he wants to leave. He says he wants to go to Florida. And he cited the high costs. He also cited a lot of the things going on in the politics of California. And it's because they come up with some like funky rules here that, you know, increase regulation and increase the cost of living, and often that don't make a lot of sense. Like recently, the governor of California, Gavin Newsom, signed a bill which mandates a $20 minimum wage for fast food workers at chain restaurants across California. And of course, you know, Newsom and everyone else are patting themselves on the back for supposedly helping low-wage workers, but the initial response that we've seen from fast food restaurants is that they're cutting back hours and now laying people off. As a result, the unemployment rate in California, it's 5.3%. That's well above the national average of 3.9%, and it's climbing, everyone. The unemployment rate here is likely to increase more into the future due to these regulations and rules that the government is putting in place, also due to the downturn that's occurring in the tech sector. So in addition to the outbound migration, don't be surprised if California's economy tilts further and further into a recession, which would cause you to think that at some point we should see a downturn in the housing market, right? Like, with it being so expensive, so many people leaving, the economy being on the verge of a downturn or in a downturn, can we see lower home prices at some point? Well, I'm gonna answer that question for you a little later in this video, but first I wanna actually take you for a drive and show you around this area of Orange County and take you to a couple other listings so you can see just how expensive this area of California is. All right, everyone, we're on our way to a listing here. You're not gonna believe the price of this listing that I'm about to show you guys. It's a 1,600 square foot house, and the list price is absolutely wild. I'm going to show you it here in a second. But first, I want to talk to you kind of about my overall thoughts on California from this trip. And, you know, it's interesting because I actually really like California. You know, I enjoyed here. When I come here, I like it. I feel like, you know, I work in real estate, I work in tech, I work in social media, and those three things. I'm like, okay, California is an awesome place. You know, there's lots of people who do what I do. Right? It's kind of my thought anytime I visit here. But interestingly, whenever I talk to locals or people from California, very quickly I get grounded in reality that California, for the vast majority of people, is a place where you either just get stuck or you're forced to leave. Because the cost of living is so high that it's impossible to save money. I mean, when you think about renters, like if you're renting in California, you're renting in this area, and the typical rent in Los Angeles, Orange County is almost $3,000 a month. For an apartment, for a house, it's $5,000, $6,000. And so people are not saving any money. Like yesterday I was at the bar in Playa Vista where I was staying, and I overheard someone talking about how their rent was due in 2 days. And they said, yeah, the rent's due in 2 days. They were telling their friend, and it's gonna be $1,800 a month. And he's like, that's gonna hurt. And I'm like, okay, like, this is how people live here, like paycheck to paycheck. I talked to someone else actually at the same bar the night before, and they were saying that, you know, they're in a 1-bedroom for $2,300 a month in Mar Vista, a little bit inland from the coast in Los Angeles County. And that's a more affordable area, but he's still paying $2,300 for a 1-bedroom. And when you pay that much money to live, you better have like career growth prospects, right? The only way I think for a lot of people that this could be worth it over the long run is if you think that being here in California is going to really advance your career and really advance your future earning potential. And maybe that's true if you're in tech or social media or maybe real estate. But that's not even a given if you're in those industries anymore, because there's a recession going on. And if you're not in those industries, you're likely just kind of treading water. And the longer I stay here and the more people I talk to, the more kind of sad I actually get that, you know, the government here, they've created this state where it's just impossible to live. Everything's really expensive. People are leaving, yet things still keep getting more expensive. How does that make any sense? And one of the biggest issues from a housing market perspective is that they don't build enough homes. The building permitting in California is non-existent. They only pulled about 100,000 permits in the last 12 months, which as a percentage of the population is like 0.2%. Super low. Meanwhile, states like Arizona permit like 3 to 4 times as much housing as California. And some of that's related to just geographic constraints. Like obviously in San Diego or San Francisco, there's not a lot of room to build. However, most of it is related to government policy. In California, they make it very hard to build. There's a lot of NIMBY, not in my backyard, attitudes on local zoning boards who don't want development. They don't want new construction. And actually, like, there's crazy environmental fees and impact fees for builders who want to kind of develop a new project or new development. So the builders, they just don't come here. they don't come here. And you could see it really started after the last crash. You know, there was actually a decent amount of building in California in 05-06 at the peak of that last bubble. You could see here the data on reventure app on building permits. Make sure to check out this data on reventure app, folks, at the end of this video. It's gonna be very helpful for you as a buyer and investor. But you can see how the building permits collapsed after the last downturn and they never recovered. Meanwhile, you look at a state like Texas, the building permits collapsed during the last downturn, but they bounced back. Same with Florida, same with Tennessee, same with Arizona. So lack of building, when you don't have home building, it's gonna create a perpetual shortage of housing. It's gonna create issues like we're seeing now in California. And a lot of this lack of building is due to the political governance here. And so if you are someone in California who's like frustrated by how expensive things are, understand that one of the primary reasons is that very low building permit rate. And the fact that when we look in the zip codes around here in Orange County, the housing unit growth over the last 5 years in many places is negative. Like, we've actually lost housing units. All right, folks, we're going sunglasses now, and I'm gonna show you this listing here in a second. But in regards to that point about contracting housing units, in this zip code in Tustin, 92780, you can see the housing unit growth rate on reventure app is minus 10%. 2017 to 2022, they actually lost 2,000 housing units in this zip code, going from 20,000 to 18,000. And so when you lose housing units, that's gonna exacerbate the supply problem. It's one of the reasons why inventory in this zip code is so low. And one of the reasons why houses like this, which are for sale, this is a 4-bed, 2-bath, 1,600 square feet. It's on the market for 1.5 million, everyone. 1.5 million for 1,600 square feet. You know, it's kind of interesting because 1.5 million, like, I talked to some people who have a little bit of money and, you know, they want to buy a house in Tennessee for 1.5 million or in Florida for 1.5 million, and they get frustrated that they're not finding what they want. But can you imagine this? 1.5 million for 1,600 square feet. And I actually went into the open house there. There was an open house earlier today on a Thursday, which was kind of interesting. And I talked to the realtor in there, this realtor named Ray, who's from this area. And he was saying, yeah, this is just the situation. He's like, there's no inventory, there's a big shortage. And when anything is priced under $1 million, he says it gets snapped up immediately. There's 15 offers, it's gone in a day. Meanwhile, when something's over $1 million or 1.5, he says it'll be on the market for a couple months. They might have to do some price cuts, but eventually it'll sell to some move-up buyer. He says usually it's someone from here. Maybe they live in a condo, maybe they rent, but they gotta have a dual household income of around $300,000 to be able to afford a house like that. Now, in comparison, everyone, the median household income in America is $75,000. So here in Southern California, you need to make anywhere from 4 to 5 times that median household income to even sniff buying a 1,600 square foot house. I mean, that's a society that's extremely difficult to live in. And this realtor, he said, it's one of the reasons why a lot of the people leave. He says that, you know, the buyers of these houses, it's not people moving in. You know, again, he reiterated, it's either kind of a local move-up buyer or a foreign buyer coming from China very often. And so again, that pushes prices up. In Orange County, year over year, prices are up almost double digits. If you look in San Diego, prices are up double digits year over year. 10% appreciation during the midst of a national housing downturn. It's absolutely crazy. But at some point, everyone, I do wonder how sustainable this is. And by the way, forgive me that I am in portrait mode right now on my phone. It's just easier to hold my phone this way. I know this might look weird on the YouTube video because you're gonna have the black bars on the side, but hopefully you guys don't mind portrait mode for right now. And I think ultimately here's the point, everyone. At some point, this situation in California's housing market becomes unsustainable. At some point, something has to break. Something has to break. And perhaps encouragingly, if you're a prospective buyer in California, California has a history of breaking in terms of its housing market. And this is something not a lot of people know, but something I'm going to tell you is you got to know. Like, a lot of the realtors are not going to tell you this in California, but California has a history of going through some deep housing downturns. Like in the last downturn, 2007 to 2012, prices in California dropped 40%. That's right. They dropped 40% over the course of 5 years. And in this area, they dropped 30 to 40%. In some parts of the Central Valley, they dropped 60%. And so just know that there is that history of housing downturns here, everyone. There's a big one, 2007 to 2012. You know, in LA, prices went down 37%. San Francisco, they went down 35%. Everywhere got hit. in that last downturn. Additionally, there was a housing downturn in the early 90s here in California that a lot of people also forget about. From about 1990 to 1996, home prices in Los Angeles and Orange County declined. Over 6 years, they declined in the early to mid 90s, and they dropped by about 25% in nominal terms. In inflation adjusted terms, they dropped about 40%. So we do have this historical record of deep housing downturns happening in California, and in fact, no other state has this same historical record of this consistently there being bubbles and crashes. And so I think it is reasonable to expect that at some point there will be some type of correction in the California housing market. The question is when, and the question is how to spot it. And the thing you need to be looking out for if you're a buyer, an investor, or a seller trying to kind of like time the market a little bit, try to understand the market, you got to be tracking three things. First are the inventory levels. Second are the price cut levels. And then third is the overvaluation of your market. And if you track those three, you're gonna have a pretty good idea of where prices are heading in the future. And in terms of inventory and price cuts, if you look at that data on Reventure app for your zip code and county, it's basically gonna tell you what's happening in the market in the short term. If inventory and price cuts are well below long-term norms, that's a sign of a seller's market. Prices won't be going down, they'll be going up. Conversely, if inventory and price cuts are going above the long-term norms, like we're seeing in certain parts of LA right now, that would mean we're in more of a buyer's market, prices dropping. And so it's very important that you establish that baseline of what's happening in your market today by looking at inventory and price cuts, and also the Reventure app home price forecast score, which takes all of the data points and kind of puts them into one. And right now I'm going to show you guys a house that's for rent. A house that's for rent in Irvine. And this house for rent is a very interesting test case of how to gauge the California housing market. Because folks, the rents here in California are also crazy. Like on this listing behind me, it's a 3-bed, 2-bath, 1,800 square feet on the market for rent for, guess what, everyone? Can you guess what the rent is of this puppy over here? Take a look at the pictures on the inside. $4,700 a month to rent that 1,800 square foot 3-bedroom. That's a crazy, crazy rent. That's almost $50,000 a year. But now, here's the twist. To buy that same house, which is worth $1.6 million, your mortgage payment would be $8,500 a month. So the cost to buy that house is double the cost to rent that house. And this is a situation we see all across California, particularly here in Orange County, is a massive buy versus rent differential. This is an important data point for you all to understand if you're an investor or a buyer to track the market. If we go on Reventure app, we can see in this zip code, the buy versus rent differential is around 90%. 90% more expensive to buy than rent. You can see prior to the pandemic, it was almost even. It was only like 10 to 20% more expensive to buy. That was a situation where you were gonna have more home buyer demand, right? When the buy versus rent differential is lower, you're gonna have more people stepping into becoming first-time buyers. But now that the buy versus rent differential is at its highest level of all time, basically matching the 2006 peak, that means that it doesn't really make a lot of sense for a renter to buy. Because if you buy, your payment doubles. So it's more financially prudent to rent. Track that buy versus rent differential, because I think when we see it start dropping through eventually lower home prices and lower mortgage rates over the next couple of years, we'll see that buy versus rent differential start dropping. That'll be a sign that the downturn is happening, right? That'll be a sign that an equilibrium is going to come into the market, just like it was during that last downturn. We saw the buy versus rent differential collapsed. That's a data point you can access at www.reventure.app under the Housing Metrics and Affordability tab. It's a premium data point. The cost to access that premium data point, as well as 40 other data points on the housing market, is only $39 a month, a minuscule fraction of the cost of buying one of these houses out here. And so if you're someone who wants peace of mind in your home buying or real estate investment decision, sign up for that premium membership on Reventure app right now and track this data month by month, not only the buy versus rent differential, but also how overvalued prices are, what the inventory trends and what the price cut trends are. These data points are going to give you confidence and comfort about your home buying decision, whether now is the time to buy or now is the time to wait.